welcome everybody to AIB Radio's County Assemblies. Jean Blaine and Maria Janet on this 4th day of June 2011. Take it away, Jean. Oh, I got one announcement to make to everybody. Some of you people are still making your payments and having fees charged. So those people that are only paying $23.97 are not going to get your recordings until you figure out to hit the family and friends button so there's no fees. We have several people that are not doing that, and the fees are being charged to Jean. So please make sure you mark friends and family and a gift. Then there's no fees on your PayPal accounts. Go ahead, Jean.
Okay, we're going to go back over the 706 and the 709 gift tax forms. Can you see my screen?
Not yet. It says go to meeting on it. Oh, there's your screen behind it. There you go.
Can you see it now?
Yes.
See, we probably ought to go over the okay, this is the gift tax form. But you can see the what they're doing is collecting the fee from the donee, not the donor. On these payments to PayPal, I'm the donee, and you're the donor. So they're not charging the donor. They're charging the donee, which on these loan, when you take out a mortgage loan or a credit card and you make payments, you're the donor and they're the donee. They should be collecting the tax from them, but they're not doing it. So you got to fill out your, you have a 3 unified tax credit. You have a $330,800 tax credit. That's on line 7 there. It's built into the form. So you got to put your name. You put your name up here. Put your first name up here. Put your last name up here on line 2.
They're numbered. Line capitals?
2. Huh?
Do you use all capitals?
Yes.
Okay.
Then you put the donor's Social Security number down here.
And
right
that's
here.
With dashes. Right?
Yes. Then you put the address here. Legal residence, domicile. Then you put your city, state, and zip code up here.
Is that in the domicile?
No, it's in the city, state,
yeah,
and zip code.
What's the domicile then? Legal residence and domicile. Explain that.
Well, domicile's not on the form. It says city, state, and zip code.
No, over on the right-hand side, Gene, 6 and 7.
Okay, legal residence, domicile.
What do you put?
Well, you put down where you reside. Then you put down your citizenship. Wherever you're resident is where you put that.
So if you've done the W8BEN form, you're going to put national of the United States, right?
Right. No, you put that down as your citizenship.
Right.
If legal residence would be non-resident alien. Or put down see attached W8BEN.
Okay.
If the donor died during the year, check here. Enter the date of the death.
Okay. Explain that. We're not dead.
Well, the all capital letter name is.
So that died on her 25th birthday.
It died at birth.
At birth. Okay.
So you put your birth date down as the date of death.
Okay.
If you've extended the time to file this form 709, check here.
Okay, so we check there.
It says enter the total number of donees listed in Schedule A. Count each person only once.
That's only one. You. Oh, no. I'm on the phone.
Go ahead.
Sorry about that. My phone was ringing.
Yes?
This information I didn't get. I registered, but I didn't get anything back yet.
Let me call you back.
All right,
Bye. Have you, the donor, previously filed a 709? Well, if you haven't, put no. You should be filing these on the. That's why they're foreclosing on your property, because you haven't paid the tax on the donation. So they're charging you an income tax. You're not claiming it; they're claiming it. Remember, if you don't claim these, they claim them. It's abandoned property. If you're filing jointly, you have a consenting spouse. You've got, it says a donor previously filed Form 709 for any other year. If no, skip line 11B. If the answer to 11A is yes, has your address changed since you last filed? Well, you haven't filed anything, so you got to put no. And 12 is gifts by husband or wife to third parties. Did you consent to have the gifts, including generation skipping transfers, made to you or by your spouse to third parties during the calendar year considered as made one half by each of you. See instructions. If the answer is yes, the following information must be furnished and your spouse must sign the consent shown below. So you put in the name of the consenting spouse and their social security number in 14. Put the name of the consenting spouse on 13, the social security number on 14. Then on 15, were you married to one another during the entire calendar year? You have to put yes or no. If 15 is no, check whether married, divorced, or widowed, or deceased. You could check that and then put deceased. Will a gift tax return for the year be filed by your spouse? If yes, mail both returns in the same envelope. Consent of spouse, 18. I consent to have the gifts and generation skipping trampers made by me and by my spouse to third parties during the calendar year considered as made one half by each of us. We are both aware of the joint and several liability for tax created by the execution of this consent.
Oh.
Consenting spouse's signature. Date. Enter the amount from Schedule A, Part 4, Line 11. Okay, we'll go there to A. Here's Schedule A, Part 4, Line 11. Okay, here's 2, 3, here's Schedule A. We got to go to Part 4, Line 11. Taxable gifts. You put them on 9, 10, and 11. 9 and 10. So you put the amount of your mortgage loan. See, you're not filing the right forms and reporting that you're giving people gifts. So you're not getting an exclusion.
So where do you put that, Jean? What line do you put your mortgage?
You put it on 11.
11.
You put it says taxable gifts, add lines 9 and 10. Okay, 9, subtract line 8 from line 3. Total deductions. Add lines 6 and 7.
So what is marital, it's in the instructions, marital deductions and charitable deductions?
Well, those are your deductions. You got to add those together. If you're claiming a marital deduction.
Okay. If you're not married, you can't claim that.
Okay, you got your taxable gifts. It says total value of the gifts of donor from column A of parts 1, 2, and 3. The total value of the gifts would be the total amount of your payment of your mortgage, if you're doing a mortgage.
That you've made. The payments that you've made on your mortgage.
Yes. Okay, this is all for 2011. This is not for 2010. This form must be for 2011. Well, it says 2010. Okay, this is the form. So what we need to do is get the form instructions for okay, it says if you gave gifts to someone in 2010 totaling more than $13,000 other than to your spouse, you probably must file Form 709. Certain gifts, including future interests, are not subject to the $13,000 annual exclusion, and you must file Form 709, even if the gift was under $13,000. Annual exclusion later. A husband and wife may not file a joint gift tax return. Each individual is responsible for his or her own Form 709. You must file a gift tax return to split gifts with your spouse regardless of their amount.
Well, that's not even in the instructions you get from the IRS office. I can't find where you are on the instructions thing at all. It doesn't even have how to complete Form 709 or 706. We're in 709. I'm in the wrong form. That's why it don't match.
Is that why they call you Wrong Way Corrigan?
No, I just have to look a little closer because I wasn't matching up what was on the screen.
Okay, here's what it applies to. It says transfers subject to gift tax. Generally, the federal gift tax applies to any transfer by gift of real or personal property, whether tangible or intangible, that you made directly or indirectly in trust or by any other means to a donee. The gift tax applies not only to the gratuitous transfer of any kind of property, but also to sales or exchanges not made in the ordinary course of business, where money or money's worth is exchanged for but the value of the money or property or money's worth received is less than the value of what is sold or exchanged. The gift tax is in addition to any other tax, such as federal income tax. See, this is different than an income tax. Nobody files these. That's why they don't tell you about any of this. They got everybody filing 1040 forms.
Well, that's
reporting it as income.
That's what's all the CPAs and everybody tell you got to have until you nail them to the wall and say, look here, 709 and 706 applies. Why in the hell are you trying to make me commit perjury?
Well, that's because they want you to pay the tax.
I know that.
It's because nobody reads anything. The exercise or release of a general power of appointment may be a gift by the individual processing the power. General powers of appointment are those in which the holders of the power can appoint the property subject to the power to themselves, their creditors, their estates, or their creditors of their estates. To qualify as a power of appointment, it must be created by someone other than the holder of the power. The gift may also apply to the forgiveness of a debt, to interest-free or below-market interest rates loans, to the assignment of the benefits of an insurance policy, to certain property settlements in divorce cases, and to the giving up of some amount of annuity in exchange for the creation of a survivor annuity. Bonds that are exempt from federal income taxes are not exempt from federal gift taxes. Are you getting this?
Yep.
That's why you shouldn't be filing income taxes.
You want to bring that down to kindergarten level and explain that?
Okay, when they do these loans, they convert the note to a security. Then they convert the security to a bond, which is not exempt from federal gift tax.
So that's why they're liable.
Yeah. What's your first clue?
It's a gift.
Sections 2701 and 2702 provide rules for determining whether certain transfers in a family member of interests in corporations, partnerships, and trusts are gifts. The rules of Sections 2704 determine whether the lapse of any voting or liquidation right is a gift. Just take the payments to PayPal as an example. They don't charge you a gift tax if you put down that you're the donor and you're making a gift. That means they're treating it as income. If you don't report it as a gift, they treat it as an income tax. Are you getting this?
I think a lot of us are.
bonds are exempt from federal income taxes, but they're not exempt from federal gift taxes. So if you don't report it as a gift, they're not going to get taxed. Duh. That's why they're not taxing them. And they're collecting the income tax from you because you're too stupid to claim the exemption, to report it as a gift tax return. How about non-resident aliens? Let's go back up here. Transfers not subject to gift tax. Transfers to political organizations. Payments that qualify for the educational exclusion and payments that qualify for the medical exclusion. These transfers are not gifts, as that term is used on Form 709 and its instructions. You need to file a Form 709 to report these transfers and should not list them on Schedule A or Form 709 if you do file Form 709.
So it says you do not file them on the 709. And that's political organizations, education, and medical.
The Gift Act does not apply to a transfer to a political organization defined in Section 527E1 for the use of that organization.
That's everything in the government. If you want to make donations to their,
The gift tax does not apply to an amount you paid on behalf of an individual to a qualifying domestic or foreign educational organization as tuition for the education or training of the individual. A qualifying educational organization is one that normally maintains a regular facility and curriculum and normally has a regularly enrolled body of pupils or students in attendance at that place where its educational activities are regularly carried on. See, we could use this as an educational exclusion.
so that does not
Qualifying domestic or foreign educational organization as tuition for the education or training of the individual. Education or training of the individual. A qualifying educational organization is one that normally maintains a regular faculty and curriculum and normally has a regularly enrolled body of pupils or students in attendance at the place where its educational activities are regularly carried on. Well, doesn't that fit us?
Yeah, it says we don't have to pay. We don't have to put it down on the form. It's not reportable.
This is what 170B1 and its regulations. Okay, we need to the payment must be made directly to the qualifying educational organization, and it must be for tuition. For educational exclusion, it is allowed for amounts paid for books, supplies, room, and board of other similar expenses that do not constitute direct tuition costs. To the extent that the payment to the educational institution was for something other than tuition, it is a gift to that individual for whose benefit it was made, and may be offset by the annual exclusion if it is otherwise available. Then you have contributions to a qualified tuition program, QTP, on behalf of a designated beneficiary, do not qualify for the educational exclusion. Then you have a medical exclusion.
Okay, so how do you know what to put on the form and what not to put on the form? These instructions are going around in a circle.
No, they're not.
If you've got
You made contribution.
if you've got a child in college, do you put it down on there? It says it's not reportable.
Well, you got, let's see, 170. So you go to Title 26. It tells you in Title 26, so we get down to 170. You need to write this down. $170, B1, individuals, then A, and then two I's.
Okay.
An educational organization which normally maintains a regular faculty and curriculum and normally has a regularly enrolled body of pupils or students in attendance at the place where its educational activities are regularly carried on. Well, doesn't that fit our classes?
Well, yeah, because we're regular and every week, and it's reoccurring.
We have a faculty
and we
and a curriculum. It has a regularly enrolled body of pupils or students in attendance.
That's right.
Okay. There you are. Did you remember how we got there?
Well, charitable contributions.
Yeah, but you know what section it's under.
It's under Part 4, Subtitle A, Subchapter B.
So we have an exclusion. Educational exclusion. Does not apply to the amount you paid on behalf of an individual to a qualifying organization.
So that means the exclusion does not apply?
Well, it says if you did it on behalf of somebody, on
Okay.
behalf of an individual to a qualifying domestic or foreign educational organization as tuition for the education or training of the individual. So it's not a gift tax. It's not a gift if you give it to somebody else on behalf of somebody, is what that's saying.
Oh, you have to give it to somebody else. Okay.
If you give it to somebody else who you do it on behalf of somebody else, it doesn't fall under the exclusion.
Okay. If you've done a revocation of a marriage license, how do you handle the marital deduction? If you recorded that revocation in the county records.
Then you treat it as an individual. You don't file jointly. Guys need to get licenses. Quit licensing yourself, registering yourself. In other words, quit giving away all your rights. You register your cars, you register your children, you register your guns, you register your property. You give it all away, and then you sit and complain about it. Now go look in the mirror if you want to know what the problem is. Quit registering everything. Everybody in the United States has registration fever. So it tells you that you have an educational exclusion. Then it has a medical exclusion. Then you have an annual exclusion. The first $13,000 of gifts of present interest to each donee during the calendar year is subtracted from the total gifts, figuring the amount of taxable gifts. For a gift in trust, each beneficiary of the trust is treated as a separate donee for purposes of the annual exclusion. So quit giving things away. Here's non-resident aliens. Non-resident aliens are subject to gift and estate taxes for gifts and tangible property situated in the United States under certain circumstances. They are also subject to gift and generation skipping transfer taxes for gifts of intangible property. See sections 2501A. If you are a non-resident alien who made a gift subject to gift tax, you must file a gift tax return if you gave any gifts for future interest. Your gifts of present interest to any donee other than your spouse total more than $13,000, or your outright gifts to your spouse who is not a U.S. citizen total more than $134,000. Transfers subject to generation skipping transfer tax. You must file Form 709, the GST tax imposed on inter vivos direct skips. An inter vivos direct skip is a transfer made during the donor's lifetime that is subject to the gift tax of an interest in property. Now they have, what they did is they set up an inter vivos. I had a mortgage that said, I have papers from somebody that says that. They got papers from the mortgagee that says that they have an inter vivos trust.
So explain the inter vivos trust.
Well, that's a living trust.
You got to come down to earth, Gene. I'm even losing you on this. You got to explain it a little bit better than what you're doing, because if I'm feeling confused, I'm sure a lot of other people on the call are feeling confused.
Well, what are you confused about?
It's not making a picture. Non-resident aliens back up there say we're subject to the gift tax. Subject to what? That we have to file the 709 and the 706, or both of them. But that's what we want to do. Because
if you are a non-resident alien who made a gift subject to a gift tax, you must file a gift tax return.
Okay, so explain made a gift subject to the gift tax. Mortgages,
The
right?
gift subject to both gift and GST taxes. If it is required to be reported on Schedule A of Form 709 under the rules contained in the gift tax, therefore, transfers made to political organizations, transfers that qualify for the medical or educational exclusions, and transfers that are fully excludable under the annual exclusion, and most transfers made to your spouse are not subject to the GST tax.
So you don't put it down there.
Well, if you have an annual exclusion, what did it say? $13,000.
So that's what you put down as $13,000, because that's your exclusion.
That's your annual exclusion on gift taxes annually.
Well, most of us don't have $13,000 or $26,000 a year. If you're
Well, you've made transfers. You transferred your note to the mortgagee, didn't you? Duh. Was that more than $13,000?
yeah,
Well, then you have to file a gift tax return.
yes.
They're taking your exclusion and making you pay their tax. Certain transfers, particularly transfers to a trust that are not. Didn't you make a transfer to a trust? Isn't the deed of trust a trust? They're not subject to gift tax and are therefore not subject to the GST tax on Form 7009, may be subject to the GST tax at a later date. This is true even if the transfer is less than the $13,000 annual exclusion. In this instance, you may want to apply a GST exemption amount to the transfer on this return on a notice of allocation. For more information, see Part 3, Indirect Skips, and Part 2, GST exemption reconciliations. Transfers subject to an estate tax exclusion, ETIP. Certain transfers that are direct skips receive special treatment. If the transferred property would have been includable in the donor's estate if the donor had died immediately after the transfer for a reason other than the donor having died within 3 years of making the gift, the direct skip will be treated as having been made at the end of the estate transfer inclusion period rather than at the time of the actual transfer. And that's what they're doing. For example, if a transferor, if A transferred her house to granddaughter B, but retained the right to live in the house until her death, a retained life estate, the value of the house would be includable in A's estate. If she died while still holding the life estate, in this case, the transfer to B is a completed gift. It is a transfer of a future interest and must be reported on Part 1 of Schedule A. Well, they're talking about you're making a transfer to the you're making transfers to the mortgagee or the lender. If you are filing this Form 709 solely to report the GST portion of transfer is subject to an ETIP, complete the form as you normally would with the following exceptions. Write ETIP at the top of page 1. What does ETIP mean?
Estate skipping transfer. Nope.
No, it means the estate transfer inclusion period. Write it down. That's why you guys can't remember anything. You don't write anything down. Write. You know how to write? Write it down. I'm going to give you a test. If you flunk it, you got to come back next year. What does that say? ETIP, Estate Tax Inclusion Period.
Tax or
Write it down.
Is that a tax or a transfer? Estate transfer inclusion period or estate tax inclusion?
It's a transfer.
Okay.
It's a transfer.
All right.
Transfer tax. That's what they're charging you, is a transfer tax, because you didn't file a return.
And that's called the mortgage.
Didn't you transfer the deed of trust and the note to the lender?
Yeah, we gave it to him.
Well, that's a transfer.
That's a transfer.
Duh. So you made a transfer. How much was the transfer? What was the value of the transfer?
The amount of the mortgage, the amount of the note.
Well, you didn't claim it as a gift, did you?
No. And we have to claim it as a gift before they incur the tax liability.
Right. You're a fast learner when you use your brain for something besides a hat rack.
Let's see if there's some more questions on the board here. Somebody says, do we need receipts or proof of donated gifts? All you have is your recorded deed of trust. That's a receipt enough.
That's you have. Yeah, you got the deed of trust, and you got the note. You donated the note and the property.
You don't
remember it's tangible or intangible. You can report both.
Right.
You can report the value of the note and the value of your property, which is the estate.
Right. So that's two areas you can put down on this 709.
Right.
Do you have to claim it in the first year of when you took the note out? Some of us are many years down the line. You can still claim anything because it's all set up under fraud. There's no statute of limitations on fraud.
Well, there's no statute of limitations on a 1099 tax return.
Right. What if your mortgage is paid off? Can you still do the 709?
Yeah. The mortgage was paid off at closing. Where were you?
Right.
Where were you, little star?
Now, what do you think, Patricia, when you write our property tax is a gift to be filled out? If you paid them, yes. Someone says if you fail to get the receipt at closing, does that abandon the claim in a mortgage? No, it's based on fraud.
You got to start assuming responsibility.
Why wouldn't you use this form if you're doing a recoupment? Of course you would.
Let me show you something. It's really going to make you mad.
So we have one here that's saying if you're rescinding the first funds transfer, you wouldn't use this form if you're doing a recoupment or an adverse claim. Of course you would. It's still a gift. They still got it.
This is, see this? Can you see this form up here?
Yes.
This is an automobile loan. This is the company that allegedly, they bought it from a dealer. Then the dealer transferred it to this Citizens Auto Finance Corporation, which is this Automobile Finance Corporation right here.
Okay.
Let me show you it's easier to show let me show you the flow chart. Now this applies to mortgages. See, this is Citizens Automobile Finance, Inc., the sponsor, originator, and servicer. They took your retail sales installment contract, which they call receivables. They sold it under a purchase agreement to Citizens Auto Receivables. This is a subdivision of this company here. This is an LLC in Delaware, Limited Liability Company, which is a subdivision of this company right here. Then they took your receivables and sold them to the Citizens Auto Loan Trust, which has an indenture trustee and an owner trustee. Okay? Now they took your Citizens Auto Receivables, which are assets, and they made notes and certificate securities out of it. Then they sold it to the underwriters and investors. Are you guys getting this?
Okay.
I'm going to show you something. This is what the public never sees.
Wages are not a gift to you.
Read this. I want you to read this.
Read
What
what?
does that say right there?
Right where? Point.
Right here.
I don't see where you're pointing. The receivables pool. The issuing entity will own a pool of receivables consisting of motor vehicles, retail installment sales contracts, and motor vehicle installment loans secured by new and used automobiles and light-duty trucks. The pool will consist of the receivables that the originator will sell to the depositor on the closing date, and that the depositor will simultaneously transfer to the issuing entity on the closing date. The receivables will include payments on the receivables that are made after the cutoff date.
So they're using your receivables as the assets to fund the auto loan trust, which is the issuing entity in that flow chart. They're doing the same thing on your loans.
Okay, we've got someone that says in Long Island, New York, they won't let you record anything unless it's a court judgment. How do you handle demons that assist the criminals? If they don't give you a bond or info, then what? You know, you can record anything you want on the miscellaneous side of the coin, and they can't tell you no.
They won't let you record anything?
He said,
why won't they?
Only a court judgment. Then you go find an outlying county office. It's contiguous to where you are, a small podunk community. Record it there and take it back to Long Island. They have to take it. This next question doesn't make any sense. It's good to pay anything off with a private money order. Private money order is better than A for V.
Yes, it is.
They're going into then doing an administrative default process, recording a reconveyance and releasing the lien after the apostille from SOS.
Okay, what does that say right there?
Where? Wiggle. Wiggle.
Right here.
The parties. Issuing entity trust. Citizens Auto Loan Trust, whatever, a Delaware statutory trust, will be the issuing entity of the notes. The principal assets of the issuing entity will be a pool of receivables, which are motor vehicle retail installment sales contracts and or installment loans that are secured by new and used automobiles and light-duty trucks.
So what are they telling you there?
They're taking
your retail installment contract, converting it, which is a debt, and they're converting it to an asset.
To pay off their inventory.
And what they're doing is taking the principal assets of the auto loan trust will be a pool of receivables. Well, they're taking your receivables, which is money owed to this Citizens Auto Finance Inc., and they're using it as assets to buy the notes. They're taking your money that you created, and they're using it to buy the notes and fund the auto loan trust.
In other words, they're getting double dipping using your money twice.
Yeah. Isn't that what that says?
That's what it says. They're using the notes to pay for the inventory. So you're not only paying for the inventory, you're paying for the note too.
Yeah, so they're using the notes as the assets on the loan trust to pay for the notes. So you're funding their notes and certificated securities, which they're selling on this flow chart, which they're selling right here.
And so
here's the issuing notes.
So that's why we get to claim both amounts on our exclusions.
Yeah, that's why you get a set-off or recoupment.
On both amounts.
Yeah, both amounts.
Not only the deed, but the note too. In a car, You get the installment contract plus the sales agreement.
Yeah, and don't you get, doesn't it say in 3-306 that you have a possessory and property right in the instrument or its proceeds?
Yes.
Okay, what is the instrument? The auto loan receivables.
That's the application.
Which is a retail installment contract. That's the proceeds.
Right.
So here's the proceeds too, is the notes and the notes and certificates, which are sold to underwriters and investors. So you have a right to the proceeds and the property, the instrument.
Right.
Well, so why aren't you doing it?
Well, we're learning how to do it. Somebody on the board here wants to have you explain exclusion again. Does it mean that we don't have to pay taxes on that portion of income? No, in this instance, you're adding it up to take it off of your total exclusion on the first page. Remember, you get a $3 or $4 million exclusion.
Well, you're using the what you're doing is you're using the credit, the tax credit or unified tax credit or the exclusion, which is $330,000.
Okay.
Which is built into the form.
Is the 709's main function to skip donation designed as gifts?
Yeah. So you got a 300 unified credit.
So when
you get a credit to that, but you have to make over this amount to have a tax liability.
Right. So
how many of you people have a loan over $330,000?
Well, there are some people that live in $1 million house. Okay, so
well, then you make them pay the tax.
Right.
Appoint them as the liability. Make them pay the tax.
Right. So when we're adding up all of these exclusions, eventually it will be deducted from this $330,000 exclusion, right?
No, you deduct that from the amount of the loan.
Oh.
That's how much you get in money, in income that's not taxable.
Each year.
So any amount that becomes taxable has to be over this amount.
Okay, so if you've got $1 million house, the first year you can deduct $330,000.
Well, then you go to an estate. The estate, you have $5 million.
Okay.
So you can deduct $5 million from it. But nobody's doing that.
Well, we just have to see how to do it and get it in a workable picture in our minds.
So you got to go to publication 950.
Okay, we have someone here that says they got 2 kids in college with student loans. Are the student loans deducted?
Yes.
There you go.
Anytime you pay out money to somebody, you got a deduction.
Whatever you spend below $5 million.
Whatever you spend is tax deductible.
Is deductible on this 709 form. So you start out deducting your mortgage and your note. Then you head on to college tuitions. And you head on to medical. Then you head on to educational. And if you have any political, you take that off too.
This is your exclusion amount. Exclusion means the amount that's not subject to a tax. This is up to $5 million now. How many of you have a $5 million loan?
Not very many of us.
This has been raised to $5 million in 2011. See, this is 2009. This is there's your 300. This is 330 now.
Okay.
This is your gift side over here, and here's the estate side.
All right.
Because you're making a donation, you should use the gift side. But you can also use the estate side, because that all capital letter name is a legal estate. So you could add both these together. You could take $5 million and $330,000, which is close to what is that? $5 million. You got $8.
$5,330,000.
Yeah. $5,330,000. Why aren't you doing it?
Well, that's what we're learning.
Okay, we're going to go back to the form now. Do you see why you're losing all your money? Okay, this is the instruction. We were on, you can use the educational exclusion. Remember, you have two exclusions. You got a $5 million exclusion on your estate and a $1 million exclusion on your gift. You're not even using your tax exclusion on the estate. You're only using the one on your gift. You have two of them.
Okay. We'll have to go over the one on the estate probably next week, as long as this is taking us to get through this one here.
So you have an annual exclusion. This damn thing keeps sticking. So you have a gift and you have a transfer tax. Is that imposed only on inter vivos direct gifts? An inter vivos direct gift is a transfer that is subject to the gift tax of an interest in property. Well, didn't you transfer your interest in the property to the lender? Did you? Doesn't it say on your deed of trust that I hereby transfer all right, title, and interest in the below described property to the lender?
Right.
Right. Well, then what does this say here?
You must report.
You must report on Form 709 of an interest in property and made to a skip person. Well, didn't you transfer it to a trust? Isn't a trust a skip person?
Yes.
Okay, didn't you make a transfer to the deed of trust of your real property?
Yes.
Well, so you made a generation skipping transfer
We
that
did.
is subject to a gift tax.
We did, but we didn't know what it was.
Well, you do now. Is there anybody that doesn't understand this? When you went to closing, you transferred your property to the deed of trust. I hereby transfer all right, title, and interest in the below described property to the lender. That's a transfer.
Right.
Well, doesn't it say you have to pay a tax on a transfer as a gift tax?
But we don't pay the tax. When we identify it on our gift tax, the gift becomes taxable to the lender.
Yes.
That's
because
the
you're
whole,
not doing that, they're making you pay it.
That's the whole issue, guys. It says it's a gift, but being a gift makes it taxable income to the other guy. That is the lender. The lender has to pay the taxes. You get it deducted. You get the property. You get the possessionary rights. You get everything, and the lender gets the tax that they are supposed to pay. But you have to identify everything as a gift on the estate and gift tax forms in order to make them liable. Right, Gene?
Right. Now you're starting to understand. You're going to go to the head of the class. You can trade in your dunce cap for a graduation.
It doesn't matter if anything went to MERS. It doesn't matter at all. Once you file your gift taxes, and if you're in a foreclosure, give the damn judge the gift tax return, a copy of it. They're going to then see that the tax doesn't go to you. It goes to the lender. It goes to the IRS. It goes to whoever you gave the gift to. Just think of the word gift as tax, income tax, to them, not you. And even if you don't have the promissory note, the promissory note is the same amount that's on your deed of trust. All you got to do is times it by 2. You have one line that says the deed amount and one line that says the note amount. You get to deduct both of them and put the whole tax on the lender. Right, Gene?
Right.
You can go back and claim anything. It's all under fraud. There is no statute of limitations on fraud. Why do you guys keep asking the same questions over and over and over? IRS is the same thing. If IRS is taking a bunch of gifts from you, they don't want to pay the taxes on it, give it right back to them. It's a gift enlisted on your gift and estate tax form, and then the IRS agent bites the tax. They got to pay it. It's income to them. What is so hard about understanding that? Can you go back to 2011 and use a loan originating? What did I just say? Some of these questions I'm not going to read. They're redundant. Of course, if you don't declare it as a gift, it is considered income to you, and that's why they're making you pay the taxes.
That's why they're foreclosing on the property. They're forfeiting the property for the tax.
Even if you paid your mortgage off, now you got 3 deductions: the mortgage, the note, and the deed, because all the payments are deductible. They're all gifts. Now you got 3 gifts to claim. Yes, the bank will become responsible for those taxes even at this late date. What if the amount mortgage is over the $3,500,000? Then you take what's ever left over and claim it on the estate side of things.
Now you can use the estate. The estate went up to $5 million.
So if your $3,500,000 is more than your $300,000, you deduct it on the estate side of the equation. Draw a line down the middle of the paper. Put estate to the way left and put gift to the right of estate. And on the other side, put taxes. Now everything that gets added up on the gift side and the estate side, the total goes over to the tax side to the other guys. They don't have to do anything. You just get yours filled out and yours done. Jean, take it away. I'll be right back. I have something on the stove.
So if you got anything, a gift is subject to a gift tax if you're required to list it on Schedule A. If property transferred in the direct skip would have been includable in the donor's estate, if the donor died immediately after the transfer, transfer is subject to an estate tax inclusion period. To determine if a gift is of an interest in property is made to a skip person, you must first determine if the donee is a natural person or a trust as defined below. The deed of trust is a trust. For purposes of the generation skipping transfer tax, a trust includes not only an explicit trust, but also any other arrangement other than an estate that, although not explicitly a trust, has substantially the same effect as a trust. For example, a trust includes life estates with remainders, terms for years, and insurance and annuity contracts. So insurance and annuity contracts are trusts. Transfers of property that is conditional on the occurrence of an event is a transfer in trust. When you transfer your property to the deed of trust, your note, when you transfer the note and the property to the deed of trust, that's a generation skipping transfer. And it's taxable. But they're making you pay it. That's why they're foreclosing on it. When they do a foreclosure, they call it a forfeiture. They're forfeiting the property for the tax that you didn't pay, you didn't report it, and get your exclusion or credit. So the lender is taking your exclusion or credit, and they're billing you for the tax. That's what the foreclosure amount is, the tax on the gift or the transfer. So if you have a skip person, if a gift is made to a trust, a natural person will have an interest in the property transferred to the trust if that person either has a present right to receive income or corpus from the trust, such as an income interest for life, or is a permissible current recipient of income or corpus from the trust, for example, possesses a general power of appointment. Skip person. A donee who is a natural person is a skip person if that donee is assigned to a generation that is 2 or more generations below the generation assignment of the donor. See, determining, that's what they are. They're a skip person. They're 2 or 3 generations removed from you, from the all capital letter name. So they're a qualified heir who has received property from a decedent, and they're taxable. So they're the donee. So here's what it says. A donee that is a trust is a skip person if all the interest in the property transferred to the trust are held by skip persons. A trust will also be a skip person if there are interests in the property transferred to the trust held by any person, and future distributions or terminations from the trust can be made only to skip persons.
So that means that everything that's in a mortgage, you know, my idea here, Gene, is that you take your chart, everything you've spent a Federal Reserve note on becomes a gift. No matter who you give it to, except another living person, I guess. And you add it all up and you deduct it as a gift.
Yeah.
And that means you gave the mortgage company a note. That's gift number one. You've made payments on your property. That's gift number two. If you paid off your property with payments, that's still gift number two. Gift number three is all the interest they ask you to pay, right?
Right.
So you just add it all up and it becomes a gift. Anybody says anything, you prove it's not a gift. Because in all these written words and all these instructions and all these rules and codes, I'm still the source of the funds. I still gave my gifts. And anything under $5 million is a gift. Is it not easier just to put $5 million on the cotton picking form? Can you claim the whole exemption?
Yes.
So then why are we bothering with adding up anything?
Well, because you need to know the amount that you gave.
Okay, that's fair enough. And you don't have to worry about any clerk or attorney or anybody saying they don't give legal advice. They don't have to give legal advice. You give them a Federal Reserve note for any reason, a payment of any kind for anything. It's a gift from you and a tax to them. If you're having trouble recording, go to an outlying recorder in a little tiny podunk town, get them to record it, take it back to the big town that says no, and shove it in their face. Okay, they're saying in Bergen County, they stopped all miscellaneous filings. Go find a little podunk county 50 or 100 miles away from you. Record it it doesn't matter where you record anything. Record it in the state anywhere, and it's recorded. Take the first page of the recording back to the big Bergen County and stuff it under their nose. They have to take it. We got someone here that says you're not making any sense. Please clarify. The asset to the fund, the mortgage-backed security trust is the receivables. If this in addition to the mortgage and the note. Of course it is.
You're donating that to the trust, which is a skip person. You're not giving it to a natural person, you're giving it to a trust. So you're making a donation.
Are there any other forms that have to accompany the 709? Yes, the 706. The estate side of that. We're getting on.
No, you file the estate tax as a separate tax form.
Right, but you have to do them both, don't you?
Yeah, you should do them both, yeah.
Yeah, yeah. You know, none of this taxable stuff has anything to do with an administrative process, folks. Why are you bringing administrative process questions into a taxable termination teaching event? We're teaching taxes. not administrative processes. It doesn't matter where they've stipulated to it, re-recorded, certificated, uncertificated, none of that matters. This is taxable terminations. Do we put any of this on a UCC 1?
Well, this is a separate issue. You're talking about a security interest. We're talking about taxes.
Correct.
We're not talking about a security interest.
It's two different things.
You should put it on you should do an ag lien.
And that's just what I was going to say, Gene. The UCC 1 gets the ag lien. The 1099 is what you use after you give them, and they don't, the 1099, that they give you, you have to correct and turn around the capacities of put you in their spot and them in your spot and give it right back to them as a corrected one. No, it has nothing to do with credit ratings. Yeah, the gurus led you down the primrose path. What happens if the appointed trustee that you've appointed as a trustee ignores everything and doesn't do anything?
He's in breach of fiduciary duty.
So then what do? Turn around and give them a 1099-C?
Yeah, you could do that.
You could take whatever you had on the situation that you told them to be you appointed them as trustee, and if they don't do it, you go file a 1099-C, which gives them tax liability, and let IRS go after them. It won't take very many 1099-Cs, and they'll wake up. Even
Amen.
if they have officers of the courts interfering, that there is a matter pending, it doesn't matter. The trustee's avoiding his duty, so now he earns himself a 1099-C. Right, Gene?
Right.
There you go, 1099-C, folks. Whatever the cost is that they're doing, if it's a traffic issue, you take the cost of that traffic issue and file a 1099-C. And because you have your fiduciary trustee appointment already solidified, there's your backup.
Tell them what that guy did that owns that
All right.
lives out there.
Here in our little town of Puyallup, which is really a small town, maybe 7,000 people if we're lucky, had a man that was put into jail, arrested fraudulently and falsely. So he got out of jail, and he did a notice of claim. He claimed $10 million on the claim, not a lien, the claim. He waited 30 days, they didn't respond. He recorded it in the county. He waited another 60 days and got to the 91st day. On the 91st day, he wrote a letter of forgiveness and attached a 1099-C and sent it out. There were 6 individuals on this $60 million judgment, I believe, $10 million apiece. And he forgave 2 of the people. Though that forgiveness became income to those 2 individuals. IRS swooped in and took everything away from those 2 individuals. Houses, cars, vacation homes, you name it, all of it went. And when they got done with the 2 individuals, since they were employees of the city of Puyallup, the IRS went after the city of Puyallup. And so Puyallup didn't even have operating monies. Now we've learned that even the cops on the road are not writing tickets in the city of Puyallup.
What's the name of this city?
Puyallup.
How do you spell that?
P-U-Y-A-L-L-U-P. Allup. Puyallup. A wonderful Indian name. But that's the power of this. If they don't do, after you've appointed them fiduciary trustee, and they haven't done what they're supposed to do, you turn around and file a 1099-C. That's exactly what I'm going to do in my case. Because they've done nothing with my appointments either. Do we get a refund from the exclusions on the balance?
Yes.
Explain that a little bit.
Well, after you deduct your exclusion, then whatever's left, if you're receiving, you don't pay a tax on anything over the under the amount of the exclusion.
Okay, but where does the refund come in at?
Well, you only get a refund if you do if you pay the tax. You get the refund if you file it as a 1099 OID, and then and pay it. Do a money order.
So essentially, are we supposed to be doing the 1099 OIDs with the 8281 plus the 706 and the 709?
If you have a gift, yeah.
So if you have a mortgage and you've been making payments, so you claim those payments as an original issue discount, and you also put them down as a deduction on the exclusion, right?
Yeah.
So there you have three forms, guys, that we need to be looking at very carefully. The 1099 OIDs, the 8281s, the 709s, and 706s. Well, we got to get some of our people that are CPAs and good with figures and everything to put in a couple of examples of how to fill out the forms so that everybody can take a look at them and see how to do theirs. There isn't very many CPAs that know this stuff. Yes.
Well, you gotta have somebody that's experienced in estate and gift taxes.
Any of you listeners experienced in that? Let us know. Every check you write is a gift. Every money order you write is a gift. Including your private money orders, right, Gene?
Right.
Would not the private money order amounts on a private money order, pay to the order of, redeem and lawful money, would they not also be listed on the 706 and 709?
Yes.
There you go, folks.
You're not reporting it as income. You have to make the payment and report it as income. That's what you're doing.
To them.
That's how much of your income they're using.
So if you fail to ask for the note at closing, use the amount on your deed of trust. This is the missing key ingredients of the puzzle. Yes, it is. What if one of the loans, the deeds of trust that were signed, and the person is deceased and someone else is now the only heir? You can still claim it. Do I have to show that I'm the heir before I claim this as a gift? No. Let them come back and ask you. You know who you are. Do you claim the gift transfer tax for both sides of the ledger. You claim it as a gift, and you also put it on your OID as an original issue discount. What line on the form does it go?
On which form are you talking about?
Okay, let's get back to the beginning of this. When you have an assignment from the originator, the assignee now can claim the gift transfer tax for both sides of the ledger. No, only you can do that. So what line on the form does it go on? Well, what line did Gene tell us to put our, I believe on line 11, we put our mortgage amount. Under part 4, if you were listening, listen to the recording again. If you refinance the home several times, each time it becomes a gift, and each time it becomes an original issue discount. If you didn't previously claim it, you can go back and claim it for every year since you took possession of the property. Now, what happens if your property is sold, Gene, and someone else is in physical possession? Do you make that income to the guy that is now in possession of the property, and do you make that income to the lender?
Well, to the lender.
What happens to the person that's in the house?
Well, don't worry about it.
You got to get them out before you can get in.
Well, yeah, but you got to do that. You got to prove that they owe the tax first. That's what they're foreclosing on, is the tax.
So then you go back and go against the mortgage company and prove to the mortgage company that they didn't pay the tax, so the mortgage company will get the guy out of the house.
Yeah.
Did that make sense?
Yes.
So if you've been paying 20 years on an account, they're saying only 7 years. It doesn't matter. Fraud vitiates everything it touches. So there is no statute of limitations. There's none of this 7 years crap.
A 1099 goes back 10. You can go back. There's no statute of limitations.
Not when it's based on fraud. We're losing money because we hire CPAs. A lot of times, yes. How does credit get us money? A money refund. Does credit just reduce any amount owed?
Yes.
They won't take it because it won't get recorded. They don't care that I recorded it in Georgia.
What'd you record?
I don't know what you recorded. Go record it again in Washington. I don't know what you're recording. Do we have to itemize the deductions to IRS? You just show the total amount on the balance of the estate.
If you have a deduction, use the deduction. That's what that tax credit is. It's a deduction.
I don't know if that is...
You have a $330,000 deduction or tax credit on a gift tax.
So you apply that to any IRS that they have accrued against you.
Yes. You have a $5 million tax or unified tax credit and exclusion on the estate side.
Because you didn't get a receipt at closing, doesn't matter. Put the figure of the mortgage in both boxes. There's no abandoned property at all. I appointed 5 trustees, 2 judges and 3 attorneys. The amount of my note in my foreclosure case is $513,000. Do I do 5 1099-Cs on all 5 trustees? I think you do. Do you do it individually, Gene, or together?
Well, how many trustees do you have?
He had 5, 2 judges and 3 attorneys.
Yeah, do it. Show them all.
Individual. They all bit the bullet. What about promissory notes? Can we go over promissory notes? Tonight we're going over the 706. Stay on point, guys. We have a CPA on the line. I need to set a 1-hour appointment with Gene. I sent 2 emails from last week. No response.
You got a CPA?
There's 1 CPA on the line. The recording does not eliminate anything on the tax issue. Why are you coming up with these questions? My goodness. You go after the darn lender. Forget about everything else. It doesn't eliminate anything. And you're not donating it to the states. Okay, we have some chronological order questions here. You start with straightening out your political capacity by filing the correct W-8-BEN. Those people that need a copy of the BEN form, email me. I'll put it on this week's webinar, the one that I have. You don't record anything. The 709 and the 706 are what you're going to ledger all of your taxable deduction donations, which is everything, up to $5 million plus $330,000 on the gift side. So you ledger it all up on the 2 forms, and then if you've done anybody as a trustee and they don't do what you ask them to do, ledger them with a 1099-C. If you want your refunds on your mortgages and whatnot, do your 1099 OIDs and your 8281s. Right, Gene?
Yes.
Try to record my substitution of trustee and bank lien. They scrutinized the document, gave legal advice, and said I'm not recording it. My county in New York doesn't care. We can't record. I don't know that you would want to record.
What is it you're trying to record?
Substitution of trustee and bank lien. That'll get you in jail right now, I think. Put it on your tax forms and do it right. That's going to get you a get into jail card. We've got a lot of people that just went to prison for filing the liens. If you don't know how to do them right, you go to jail. Is there a ledger form? Yes, 709 and 706. Read it carefully. Read the instructions. Listen to these webinars. Read the transcripts very slowly and very carefully until you figure it out. When you think you've got it figured out, maybe we can get someone who's got it figured out to review what you've put on the paper. What's after the 8 BEN? The 706 and 709? The OID with 8281. Get them all filled out. Doesn't matter whether you have in format A, B, C, D, or A, D, B, C, or C, A, B, D. Doesn't matter. They're all the forms. Right, Jean? Okay, tonight, Jean, you were going to go over the electronic filings. Did we lose you, Jean? I don't hear him, guys. Oh, there you're back.
Huh?
There you're back. The question was, what is the format of the forms? It doesn't matter as long as you got a 706, a 709, a OID with an 8281 filled out. And then if you need a 1099-C, because nobody's listening to you, you got that in the backup. But your main forms is the LO and the W8BEN. So you do your W8BEN and you keep a copy of it. So whoever asks you anything with your mailing receipt, here you go, it's been mailed in, I altered my political capacity. Then you have your OID and 8281 if you want a refund of anything that you paid. If you want to fill out your estate and gift taxes and make it an income to the other person so that they get off the street, they get off the bench, they get out of the recording, they get out of everywhere they're at because they bit the bullet for a $4 million tax lien. A few of the tax liens against some of these public servants, and you'll make sure that the soldiers that follow them will stand up and do the right thing. So sometimes it's better to do the tax, give a tax, like the guy did here to Puyallup, than it is to try and run around and get a refund. What do you think, Gene?
Yes.
We've got to start cleaning out the benches. We got to start cleaning out these women and these clerks that think that you work for them and not the other way around. And all they got to do is stand back and say, we don't give legal advice. So what? You bit the bullet. I appointed you as a fiduciary trustee. You violated your duties. Enjoy the tax liability. You take them out of the job. You put them in the soup line. Sometimes that's what we need to do. And if more people would do it, then we would find we would have honest government. Because everybody that got in those jobs would know, if I don't do it right, I'm going to bite the tax bullet. So we don't need a gold bullet or a silver bullet. We need the tax bullet. Make it work for us, right?
Tell them, Mom.
There's no summary judgments to any of this. We are dealing with taxes, not summary judgments. We're not, the note becomes a tax to them or a refund to you. Take your pick of what you want to do. I would like to do the tax bullet. I don't know about you. If you're dealing with entities here in the Northwest, give them all the tax bullets, and you'll find we will be cleaning things out rather quickly. Right, Gene?
Right.
We got through the 706 tonight. Now we have just a few minutes left, Gene. People want to know about the electronic filings.
The IRS is coming out with a new form. It's called an 8109B.
Explain it.
I'm going to do one better than that.
And how soon can we use this form?
I'm going to show you one.
I hope it replaces the other forms. I don't like
It does. That's why you guys are not getting your remedy. It's because the IRS is loaded up with paper.
Well, they're getting so backlogged with paper, they don't know which end is up.
Okay, this is what an 8109 looks like, B. Okay, I want you to look at this. What does that say?
Where? Separate along this line and submit to the depository with a payment.
Remember, every tax bill is a bill, tax bill.
Every bill is a tax bill. It doesn't matter what it is. Okay, so amount of deposit. Oh boy, when you add up your 709s or your 706 and your 706s or your 1099 OIDs, you put the amount of the deposit there. Add it all up and it goes in one convenient little spot. But if it says detach along this line and submit, go up above at the top of the form again, Jean, so we can see the top of the form. Okay, over on the right is a darken only one type of tax. So if you're doing a 1099-C, you darken the second little box. I don't see, oh, maybe they're over further, the 709 or 706. Is it over further? First quarter, second quarter, third quarter, fourth quarter. Explain some of that. Bank name.
Well, this is 941 is a employer's quarterly federal tax return.
Okay, but what does, okay, how does that apply to the people?
Well, first you got to do is set up an account.
We have to set up an account?
Yes.
Why?
So you can make payments.
We're the employer?
No, you make payments.
Payments of what?
Well, for the tax. That's what the money order is.
So you attach this form to the money order?
No, you report this, your money order on here.
Okay,
it's a tax payment.
Some of us that have paid money orders out recently, we put the amount of that money order on this form under a quarterly federal tax return.
Yeah.
And
this is
we
federal,
have,
what does it say? Federal tax deposit coupon.
okay, so what is the criteria for setting up an account?
Well, you open up a okay, here's
It doesn't say how to open an account.
it says income taxes. Form 1120, 99C and 99T and 2438. To make a deposit for the current tax year for any quarter, darken only the first quarter box.
This applies to estimated income tax payments.
It shows you, I think, on the, let me find the instructions on this. They have one that's current.
It says that the 8109B paper coupons, that none of them will be accepted.
Well, let me. Okay, let's see. They got one for 80. Okay, that's tax form. Says they're going to drop.
The coupons after 2010.
I was told they were going to this form. Use of paper coupons. Come on. I don't like this. The Zella Firefox. Well, he said here, but I was told it was gonna.
Well, just explain what you were trying to tell us.
Well, you can pay your taxes. The IRS is being overwhelmed with accepted for values. They don't have enough manpower. That's why you're not being processed. Their forms are not being processed.
Because there's not enough people to do it. So now we can do it electronically with the big computer in the sky?
Yeah, that's what I was trying to tell everybody. They got this with this electronic I don't know where the hell it is.
Okay, so some of our legal beagles can go down to their IRS offices if they're strong enough and say, I understand that we can electronically file everything we need to file. What is the process to do it? I have some gift and estate taxes I need to file. And just ask them.
You know, I don't know what I did with it. Let's see. Maybe it's in class docs. Look, I had a brand new one here on the computer that was let's see.
Is it in your tax docs? It's just that how do we become an employer? And what would we tell the IRS if we're going to say we want to apply for this?
Here's the, let's see what this one says. This one was in color. I had a colored.
Is that it?
Was,
blue.
well, it was colored and it had electronic, had an ACH attached to it.
And you just fill that out, and then what do? Just send it in, or scan it, or what?
Well, you got to set up an account with the bank, and you make electronic payments.
So you're sending.
I'll have to find the damn. I don't know where the
So
form is.
well,
I had it here.
we'll try and get it on the webinar handouts. So what you do is you're setting up an account with the bank, not with IRS.
Yeah, and you make payments to the IRS through the bank.
So you submit your money orders through the bank to the IRS.
Yeah, instead of doing it through the mail, you do it electronically.
Okay. There's electronic filing in. Electronic Federal Tax Payment System.
I don't know what I did with it. It's
Okay,
easiest
so
way to pay.
how do we get to this welcome EFTPS? What is the link? Go back to the very first part of it so we can get a good screenshot.
Well, this is it. I'm on the website now.
Yeah, but let's read off this website here. www. You covered it up. EFTPS.gov/EFTPS/.
Here's the phone number, 1-800-366-4484.
Okay. And
The
then
Treasury Inspector General.
so we tell them we want to set up an EFTPS.
Yes.
And we have to have a bank account to do that through.
Yeah, here's the contact information right here.
Okay. Individual is 800 3. You got to read it, Gene. It's the second number. It's not clear. 3-86541.
316-6541. 1-800.
And we would go under individual.
Right.
What is this something assistance up above it? EFTPS.com assistance. 800-555-8778. Customer support 24/7. Help, e-help, which is electronic help, which is 800-255, I can't read it, 0664, I think.
Where are you at? I don't even know where you're at.
Under additional numbers. The first line is e-help.
Well, it says Social Security number, employer identification number.
Above
name.
the Social Security number, just above it. IRS, EFTPS, e-help. That must be electronic help. And the number is 1-866-255.
0654.
Okay, 0654. All
Central
right.
Time, Monday through Friday, 6:30 a.m. to 8 o'clock p.m.
Okay.
IRS individual taxpayer information.
Well, what would you tell to a person that you're trying to get help from? I have some gift and estate taxes that I need to electronically file, and I need to find out how to do it, right?
Right.
There's your answer, folks. Don't talk about you being a taxpayer. Tell them you have some gift and estate taxes and that need to be electronically filed. And you have some payments that need to be paid electronically. And if they say payments for what would you say? Gift and estate taxes that I need to pay electronically. Right, Jane?
Right.
Okay, folks, we're at the end of the hour. We're 20 minutes over, in fact. We will try next week to get to the 709 form. We did 706 today, I think. No, we did the 709 today. We will try and do the 706 next week. I will try to attach a W8BEN form that I've converted into a Word document form. And Jean, we don't want them changing anything on the form except your name at the top, your address at the top, and your signature at the bottom. The form is already done as it is supposed to be done the way Jean told us to do it. If you have any questions, email me. I'll try and answer them. I hope that I've answered everybody's questions as best I could. I lost the, I got to get it back here. We'll see if there's a few more questions that we didn't get done. Do you have an update on the REM case, in REM case?
Yeah.
Okay.
I'm getting ready to file it.
Okay, our screenshot guy says he's got the colored form in the docs. Now, 940 is an employer payroll tax form. What do we have to do with that?
Well, you tell them you want to make, forget that. Tell them you want to make payments on a gift and estate tax.
Ask Jean how you're planning to collect the $30 billion ag lien against the Federal Reserve Bank at Cleveland.
Foreclose on them.
Okay.
Through any judicial or non-judicial process. An ag lien is a lien, not a security interest.
Yes, you sign in red ink. Front and back, bottom corner.
No blue ink. That's for dead people. If you're dead, do it.
Oh, we have one guy that says he's got a copy of a claim for $10 million. Send it over to me, and we'll see if we can get it reviewed. I think that's all the questions we've gone through tonight. I hope I've asked everybody's question. Some of the questions have been redundant, and so we are patient with you. We know you've been incorrectly schooled, and we know that you've been damaged through our wonderful fool system, and we know that you're all coming along. If Maria sounds didactic, I apologize. It is not my intention. The CUSIP lookup went out on 5/14 webinar. I gave you the links to go in and find out how to look it up. There's 3 or 4 links there on the DUNS numbers and the CUSIP numbers. You don't need to set up a business account, for goodness sakes. People want to know how it's coming along with the attorney for the in-rem complaint. I know Gene has said that he's having trouble connecting. Just be patient. It's being done. I think that's all, Gene. Closing comments. I just want to say how much I love each of you. I'm thankful for each of you, and I'm definitely grateful for all the education that each and every one of us is receiving. Without you students to teach you, and so that you can go out and teach other in your local areas, this is what needs to be done. Final comments, June.
I love you, dear memories. I forgive you, dear memories. I'm grateful for you, dear memories. I trust you, my dear memories. I thank you, my dear memories, and I'm sorry for you, my dear memories. I love you all. Come back next week. Thank you.
We'll see you next week. Good night.